Hi guys, and welcome to the Crypto Womble channel. A couple of weeks ago we did a video on tradings and trying to work out if we could create a strategy, and we were using a very basic approach. Since then I've let these charts run, so we're now going to revisit that and have a look at how we can enhance and modify that strategy and maybe even make a proper one to go forward. Now, there are a few things to be wary of or to keep in mind, and one of them is what exactly are we trying to achieve? So what style of trading, if you like, that we're going to be using? Now, obviously, it's one that makes money, because otherwise what's the point? But there are some real fundamental questions to ask ourselves here. So, do we want a very fast sort of scalping kind of approach, or do we want a slower, longer term, higher profit based kind of strategy? Now, personally, I go for the longer term profit based, and that's kind of where I'll be heading with this strategy, but I guess it can be modified. Shorter candles, shorter periods, and you could possibly scalp off it. That said, I will say number of trades doesn't mean more profit. And if you think that 400 trades a day is great and you're trading that, that's brilliant, but it all comes down to the ROI at the end of the day. And I can tell you, as a fact, that it's not going to beat a better, longer-based strategy if you've got 400 trades, for example. The other thing to take into consideration will be the positional size. So how much of our portfolio, our fund, are we going to be risking every time we open a trade? So, for example, you could do 1%, maybe do 100 times. That's quite fast, I suppose. Or maybe you want to do 10% and only do that 10 times, which is slower, but you get the same end result. The other thing we need to consider is exits. So there's no point, for example, in trying to take 0.5% of a profit if you could lose -5, because the risk reward is just ridiculously unbalanced. You must have a balance then. You must really be taking more profit that you could potentially lose. Now, that's pretty basic stuff. That's a 101, but people do lose sight of that. The other question that people ask is, should you be using TP or TSL, or take profit and trailing stop loss? I believe you should. I don't see why not. In the strategy we're looking at, I think there's going to be quite high, but it's not a cop-out. And some people said that TP, TSL is a beginner's exit, and quite frankly, that's not true. The other thing to take into account with any exchange is the trading costs. So I'm using Binance, as people probably know, and you have a choice whether to use their own coin, the BNB, or not. If you're not using BNB, which I don't, anything less than 0.2% profit is actually a loss. They will charge you that for the buy is 0.1 and the sell is 0.1. So you need to make 0.2 or above. So don't count any sales less than that as a profit. And there's a whole question about shorts and stop losses. I stay away from these. A couple of reasons. Stop loss, they tend to recover sometimes, and I think you need a better exit than a blunt stick that a stop loss is. It's kind of okay, but you just need to, I think, be a bit more finesse with the strategy and not rely on that. Shorts, well, problem with shorts is and the way the signals are processed. Usually, not all the time, but usually, by the time you get that short signal, the short is already over and the position will start to recover. I don't think I've really ever made anything on shorting within the bot. I'm not talking about shorting on things like BitMEX, I'm talking about shorting in the bot. So I really, really would stay away from them. There are reasons why you'd use it, but generally for this strategy, we're not going to be using stop loss and we're not going to be using shorting. So what I'm going to do, I'm going to show what's called an oversold bounce. We're going to be using a daily candle, and I think we're going to be using full candles. We're going to stay away from partials on this. Our take profit, I'm going to set it at 2%. That's really low. I mean, I'd like to see that more like 5-6%. And we're going to use the TSL at 1.9 arm and a 0.4 trigger. As I'm saying that and I'm recording this, I am really thinking those should be a lot higher. But we'll start low, and if we can move them up, then that's great. And we can always work that out based on the price of the coins and how it actually went. We're going to add a anti-crash exit condition, and we want to work out what's acceptable risk reward on trade wins versus losses. When you see the strategy, you'll understand that there will be good buys, there will be okay buys, and there will be bad buys. And it's how many bad buys we can sort of have or suffer as opposed to the good and the kind of okay buys. So with that said, we're going to go to the chart. I've taken the liberty of adding some buy points potentially in. Okay, so this is the chart. It's a one-day chart, and we're looking at Bitcoin versus USD tether. Now, you might remember from the previous video we put some blue arrows. They tend to be the larger arrows on this diagram, on this chart, and I've added in lots of other arrows which would show our potential buy-in points. At the bottom we've got RSI 5, which we'll be using really as a training exercise, if you like, to show that there was a time where RSI was leaving its oversold position, which could be where we wanted to buy. Now, there were some real issues with using RSI in this way. If we said things, for example, like buy when RSI is greater than 30, and we take an example down here, we'd be buying all the way up, or all the way up, or all the way up, and obviously that's not what we want to do. So, in this video, I'm going to move away from RSI, so let's take that away. And I'm going to do what's called a bounce, an oversold bounce. So we're going to be using Stoch, and we're going to be using the stochastic RSI. And the first thing we have to do is change these down colours because no one can see what they are. So the K we're going to change to yellow, maybe, and really big that up. And the D we will change to green, maybe. Oh, and there goes Twitter, like crazy. I don't know what's going on there, but we'll have a look later. Okay, so what we're going to try and do in an oversold is basically look at the K and D of Stoch RSI, or stochastic RSI, and where they kind of cross and they're oversold, we want to buy in. And what we need to do is correlate now where I think would be good buying positions, bearing in mind the TSL settings and the TSL, that's starting to take profit, that we discussed a couple of minutes ago, where we would actually want to buy in. So if we start at this end, there's a cross there. It's not an oversold, but really that'd be a good buy, wouldn't it? There's some crosses here which are a little bit dodgy territory. There's one here, which I've highlighted with the arrow. There's another one here on the cross, not oversold, but still a cross. Another one here. There's one there, which we might just get away with. A couple of percentage profits there. We've got another one here, which would be a really good one because that goes all the way up. There's a kind of a mess here, but it's kind of there, which would be good because we could catch that candle. It'd be brilliant. Another one here. So these are lining up with the little blue arrows, generally speaking, anyway. There's a mess here, and I put some little stop signs, I suppose we could call those, where really we don't want to buy there. There's another one here, and that lines up with the blue arrow. Another one here, here, all the way to the end. And this one is right now, actually. It's the 24th of May at 24th of May, is it? My gosh. And we think it's going to go back up, but it might just bounce off there, but who knows. Now, do we want to do a oversold? So if we do oversold, we'll only be buying if it crosses below the oversold line, or these. But we'd be missing out on huge sales. So I'm going to suggest that we do a stochastic RSI K cross D as a buy-in and see how that goes. And then the anti-crash piece would be the reverse of that. So when K goes below D, we could have a TSL of, I think we said it was 1.5%, and a take profit of 2, say. I am concerned because there is a lot more profit we had here. I mean, if we look on the exchange, if we bought in here, that's 12.67. It doesn't really end its run until 2.66. That's over 10%. And I'm really want to increase the take profit to at least 5, and maybe put TSL at 1.5 with a trigger of 0.5. But that's fine tuning. We can work on that as we go forward. But what we're trying to do is get out on situations like this, because we don't want to play there at all. That's not a good playground. And of course, there's the K going below the D, or the D going below the K, depending how you want to look at it. So we could get out here and we wouldn't be subject to all of this nonsense here. And likewise here and over here as well. So in a nutshell, that's what we're going to do. Now, we've got to look at these stop signs because we don't really want to buy on these if at all possible. There are a couple of ways to do that. One, you can just accept that there will be certain bad buys. That's an approach. And you can use the exit of K going below D to get out at a loss and balance that against all the other blues that we see here going back to November last year, where we would actually make good profit. And that, I suppose, highlights the second issue with this, in that that's a long period of time. That's 6 months, and we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 buy positions, which is about, what, 3 a month? Maybe 1 a week if you're lucky. That's not a lot. So there's another way to do this, and it would give us more trades, and it would potentially give us more profits. And that's instead of saying when K crosses D, we say when K is above D. And then the exit is when K is below D. Now that can seesaw us, and what I mean by that is where there's a lot of noise, we would buy, sell, buy, sell, buy, sell, buy, sell, but that's kind of the risk-reward piece. We could also top it and say don't buy when we're above or below a certain value, or we could use another indicator. For the purposes of this demonstration, I'm going to take the hit. That's the way it's going to be. We're going to buy. If it turns out to be a bad position, we're going to dump it and move on. And we're going to be using K above D and K below D as our main entry and exit points, which isn't strictly an oversold bounce at all, but it's a variant, let's put it that way. You could use a fast moving indicator, maybe something like a momentum indicator to make sure there's enough momentum. MA, OBV, MOM, whatever is your favorite. You could use a fast moving MACD, as I said, and do a signal check to see if that would help, and it'd be worth playing with those indicators. And maybe that's something we'll do in a refinement of this when we come back in, say, a week's time, maybe 2 weeks, and have a look at how this was going. So we're going to try and put that into a bot. My challenge point is I don't have a spare bot to actually run this on. So I'm going to have to find a bot, and then we'll set it up and we'll see how we go from there. Any questions about this, please let me know. And if you've got ideas about how you would not buy here, or not buy here, or how you would actually buy in this scenario, then please let me know. Thank you very much. We'll go and look at the bot now. Okay guys, so here we are trying to find our WolfPackBOT software. We're going to be using US dollars for this strategy. I'm not really using this for any serious testing. I'm actually testing a Bitcoin strat here, which has been running for a couple of days, which is doing quite well actually. But let's get rid of that because that's just a bit of noise. So we need to create a strategy. We're going to create a new one. I'm going to click new. I'm going to call this Womble bounce. Why not? And there we go. So, buy signals. Let's do it. So, in this new version, of course, it all highlights up, and we need to get rid of some stuff here really quickly. So, we don't want that. Definitely don't want that. This is the Bitcoin settings. RSI. What the hell? Okay. Definitely don't want that. Let's go through. We need to stretch RSI or stochastic RSI. We'll leave that. Let's turn it off. So we now should have no green ones apart from our stochastic RSI. So great. So buy signals required. 1. Sell signals required. 1. I always put these higher just in case there's something set in the indicator settings. Percentage buy amount 5. Why not? Only scan final candles. Yes. the rest of this is pretty much pointless. We're going to open a market, so none of this is relevant, and we're going to do 2 symbols per position. Yeah, okay. Closing the position. Let's have a quick look. Yeah, we're going to dump that market. Close based on strategy. Tick that because obviously if the K goes below D, we want to sell. Profit loss check, no. Closing position, shorting, we're not going to use any of those. No short close trailing stop, no stop loss. Just going to check that they're not set. Ah, look at that. Stop loss isn't set, great. Get rid of that. Now, I think this has got to be really quite high. I'm going to put that to 10, and I'm going to set it at market. Trailing stop loss, I'm going to give it 2. I know I said in the video earlier, but I really can't suffer that. 0.7. So this will catch any of the smaller ones, any luck, and this should, if it's rising and pumping, not fire and allow us to take a higher profit. So I'm just going to quickly look at our Stochastic RSI. Here we go. There we go. So now the RSI period is 13, and I'm going to flip to a different screen at the moment just to check what we set it to. And it was 14, 14, 3, and 3. So it was 14, 14, 3, and 3. I'm not sure if binance is an EMA or SMA. If you know, could you let me know? And maybe we need to change that. As we're not generally doing an oversold threshold, we don't really have to worry about any of this. It's necessary to buy, it's necessary to sell. We're going to drag this over a little bit because this gets a little bit difficult to see. And basically what we want is K is greater than D, which is in here somewhere, trust me. And there's the things that where you say it's greater than or less than the oversold if you really want to do a true oversold bounce. Where is K? Ah, there we go, K above D. So we want to do K above D. And our sell signal is K below D, which is the stock swish K below D. And there you go. Take off shorts, we don't want to do that. And we want to apply that. Okay, that's it. That's how quick you can set up a strategy. Go to your config. Bot is stopped. Go on to USD. Oops. Scroll down here, bit one more bounce. It's a 1-day candle. We're using 26 coins. Okay. We might have to take some of those coins out, but we can use the coin statistics indicator page to have a look at that as we go forward. Auto shorting, get off. Yeah, and that. So we just want to buy and sell 1-day candles, 26 coins, one more bounce, and away we go. Now we did start with partial candles, and this could cause some interesting problems. And the reason is, you know, you might be halfway through a candle and the indicators are crossed, but they'll uncross by the end of the candle, and all sorts of stuff. But we're going to leave it anyway, and just going to play that again because I'm paranoid. Check the dashboard, so there's no data in here whatsoever, which is great. Press the start button, and we'll see what happens. And wait for that to start. I'm running this on a PC that's not really spec'd to actually run this at all, so it does take a little while to run. And here we go. So, and then we just sit back and wait to see what happens. I'm going to pause the video here, and then we'll see in 10 minutes or so if anything's bought. And if not, we'll end the video and we'll come back in a week or so, maybe a week or so time, and have a look at what we've got, if anything.